And we are live here at the Best of Investing. All right, so our times are 6:40, 8:05, 7:18, 8:18, and 5:10. All right.
Where's this thing?
I'm wondering how we're going to do this where you could...
I don't know. We'll see.
We'll figure it out. We'll figure it out.
Might be able to wing it.
Yeah.
Wing it in there.
All right. And so, Roger, we're going to start off with you.
You got to make sure you sit close enough to get to the mic so
Yeah,
so we can hear you.
And then you have your headphones on just so you... Well, actually, here we're looking at...
Got my headphones on.
Here's the roof.
Yeah.
Shoot. All right. Ready? We'll get that a little closer. Sorry, get that a little closer to you. And remember, you're going to almost eat the mic like that. All right. Okay. You can hear that pretty well.
I can't hear anything.
You can't hear. Let's see.
I can't hear
what
not
number?
a thing.
Hold on.
Hello, hello.
That's me.
Oh, sorry. Okay. All right. The only reason that the headphones are important.
Can you hear yourself
Roger?
now?
Nope.
Roger, how about that?
That's me.
Oh, that's you? How
You know,
about
he may not be plugged in. Hold on. Let's try this. Is that better? Ah, that was him. Okay, he's all set.
Here I am.
All right,
Okay.
good.
So the only reason that the
Yeah.
headphones are important is just so you don't do this. When you go like this, so you go, oh, that's, yeah, no, not to do that. All right. If you guys are ready, I am ready.
We're starting out with Roger. We're going to talk year-end.
Well, year end.
Year end, and
We're at a
December.
place in the business cycle, and
Yeah.
it's holidays, and
Okay.
we're all
Let's talk
happy
about
and
that. Yeah,
excited.
there's lots of good stuff. We do every December. We do year-end and we do prediction. We talk about predictions. We talk about what they're saying. Although the articles really haven't started to come out yet. Oh, let's just go ahead. Let's start.
Okay, so remember, get about that close if you can.
Yeah. You're
Just move a little closer. Sorry, I know.
There's a desk in the way.
I know, but see, we want to get you on
You slide
TV
over.
here. Well, don't slide over too much, Mark, or else we won't be able to get you in there.
Okay, I'm over as far to the right as I can be.
Yes, you can. Okay.
All right, so you can get closer.
That's
I
it.
promise
Okay.
not to do
Don't mind
anything untoward.
Okay.
Have you bathed recently?
Yeah.
In the last 6 months.
So was it last week or the week
Some
before?
Yeah, that's right.
Something like I'm
We trade
strong.
off. It's like sometimes when money is tight, it's like, okay, Christian, it's your turn to eat today. Sarah ate yesterday. Okay, ready? Here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Humph of Pacific Private Money, and our special guest, Roger Gaynor of Gaynor Financial. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. They're still a good sponsor for us.
Yeah.
Let's see. Today's trivia theme is completely random questions. All right. I can't give you any hints because you guys are just too smart. All right, Roger, you are a financial advisor in San Rafael.
Yes, I am.
And since we are in December now, we got to start
December,
talking
yeah.
about year-end stuff and what is on the horizon.
Predictions for next year,
All right.
2020.
Well-
Should we fear it or should we revere it?
Well, we should anticipate that there's some changes in the wind. And, given where we are in the economic cycle, we talked a little bit about this before, last time I was here. Things you want to buy insurance before the house is on fire.
Yes.
Yeah, I tried doing it afterward. It doesn't work very well.
It doesn't work very well, and it's sure, if you can find it, it's going to cost you an arm and a leg. So with your investments right now, a lot of markets are getting a little long in the tooth. We don't want to, if clients want to, or listeners want to hear more about some of the statistics that are underlying the stock market, the real estate market, the bond market, let's just say there's a lot of very strong signals that have been very, very reliable over decades,
Okay.
that are suggesting that there's probably a recession on the horizon. It might be.
Besides just the fact of, like every 10 years you get into one.
Well, and so we're past due.
Yeah.
And actually, I've studied this. This recession cycle goes back to the 17th century. I mean, almost from the time of the Pilgrims, where we've borrowed money from the world. We expand our economy. The world thinks the American consumer is a worthy investment. And then the world gets a little nervous that the consumer might not pay us back. And then they stop lending to us. And we don't have that extra money supply that has been, we've had low interest rates for a really long time.
Yeah.
And so it's been very easy to bid up the prices of riskier assets beyond their historical true value. Okay, intrinsic value, if you will.
Yes.
And so the more you put air in a balloon, eventually it's going to pop. Okay, and all this cheap money that we're in awash in has been like putting air in a balloon. And eventually it'll stop working. So we've had a very accommodated Fed that's held up stock prices, kept bond prices high, which means yields are low, and helped to inflate real estate prices in many markets in the country. Certainly around here,
Indeed.
People start to think it's a right for my house to go up in value every year. But if you look at some of the trends, both in the commercial and the
some areas are cooling down.
Very much so. I don't believe, for example, Zillow is giving me an accurate estimate of my home's actual value, but you can see the trend. So they have charts, graphs of the value, their estimate, their zestimate value.
Based on prices per square foot generally.
Yeah, generally. So you can see what the trend is. For example, my house in Mill Valley, according to Zillow, dropped $10,000 in value last month. Last year, it dropped $100,000 in
Holy
value. And
at this rate, it'll be worth zero.
We're in a desirable area. It rallied a little bit the first half of this year, but we're seeing that softening in a lot of places. So while markets are good, and I can tell you a bunch of my clients are taking advantage and downsizing right now. They're selling homes, looking for less expensive places as they retire.
Mark, you're experiencing that Pacific Prime money too.
Yeah, absolutely.
People coming to borrow money from you because they're downsizing.
Because they're downsizing, and I want to get that new place, and then put mine on the market.
Exactly.
And we're seeing longer times for inventory to stay on the market, and a lot of they're just little things around the edges. And if you're paying attention to the big picture and not just saying, oh, the stock market set 3 new records last week. It's setting records, but if you look beneath the surface, fewer and fewer stocks are participating in setting all-time highs.
So which ones? The ones that are paying higher dividends? Or?
No, it's the popular names.
Gotcha.
It's the sexy stuff that everybody piles into.
Okay.
So we're looking in other parts of the market for value because there's stuff that just doesn't make any sense. And you can also see that certain conservative assets now are valued at ridiculous multiples. For example, Procter & Gamble is trading at a multiple of 75.
Oh my God.
75.
You mean the PE ratio?
The PE
75
is 75. It's like it's an emerging growth tech stock.
That's
okay.
That's crazy number.
Well, professionals have been rolling into this for a while.
Yeah. Tell you what, when we come back, we're going to ask your advice on what shall we do?
What shall we do?
Okay. First commercial break trivia question is, what Australian rock band released the album Business as Usual in 1981? Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate. What Australian rock band released the album Business as Usual in 1981? I want to make a quick mention here. Roger, you will answer. You can answer when we get back. A quick mention here for, remember the drink Go Girl with lots of energy? I had one about 2 hours ago, and I'm still going strong. You can get it at Safeway and other outlets. It tastes good, low calorie, gives you a lot of energy. Go Girl, GoGirl.com. Okay, Go Girl Energy is what it's called. All right, stay with us. The best of investing. I'll be right back. All right, it's our first segment.
Thank you for doing that.
Yeah.
It helps to know.
Well, I usually, and then I tell you when we're ready to go, too.
Now, did I record that time?
Yeah.
Remember last time, the whole first segment, I didn't record?
Yeah, you know what? That was my fault.
Yeah.
And then we had to come back and do the first segment over again.
Yeah, no. I did this, and I did that on
Like one of the
I
few
did one of the
times
shows.
in like 9 years.
Yeah.
It's just,
That's
I'm
it.
a-
I mean, also the camera here is just this time I did remember to do it beforehand. This is going to be December 7th.
I like your little stacky things over there for your tripod.
Oh, I know, because you kind of can't get it to the right
You got
size.
multiple little paper and
there's a
sticker
technique to
thing.
that.
That's right. You got to get it just right. Otherwise, it's like this, or
Okay.
because you can. I don't know if you can see that screen, but that's what.
Nope.
Let's save this here. Alrighty. Are you feeling the carpal tunnel again, or you said that he?
I
Okay.
pulled something in this ligament right here. I was putting covers on the furniture
Yeah.
before the big rain came in, and it all of a sudden it felt like somebody hammered a nail
No,
right
man,
into
God,
that
you're
spot.
getting old. I don't like it.
Oh,
I didn't
getting
sign up
old.
for this old stuff.
No, me neither. But here it
Crazy.
is anyway. Still beats the alternative.
Yeah, that's true. Exactly. Like I said before, every day I wake up without a toe tag on, I'm happy. All right. Let's see here. Okay. The way do your
Oh,
yeah
yeah.
there.
Mhm.
Okay. Ready? Go. Welcome back to the Best of Investing. Edward Brown here, along with Mark On and Roger Gaynor. First trivia question was, what Australian rock band released the album Business as Usual in 1981? Do you remember that?
Yep, I
Rogers.
do.
Yeah.
The Man Down Under.
No. Well,
That was one of their songs.
that was one of their songs.
AC/DC.
Men at Work.
Men at Work. That's
Oh.
right. Laying Down Under. And
Vegemite sandwich.
I know. You ever had one of those? I was in Australia right time. It is
I looked at
awful.
one.
Oh, it's
That was-
awful. I not Vegemite sand. I just had a little bit of Vegemite, and it's like
An
nasty.
acquired taste.
I ain't acquiring nothing. This holiday season, I invite you to share the magic as we enliven your heart and send your spirits high. Join us at Transcendence Broadway Holiday Spectacular at Luther Burbank, which I've gone to before, and
Oh, that's right.
Santa Rosa.
You
They do
drug
a
us up
really
there one year.
they do a really good
Nice.
show. That's
I'm glad you
reserve your seats at BroadwayHolidayShow.com. All right, Roger. We were talking about what is one to do?
What is one to do?
Yes.
Well, the first thing is to acknowledge that even though things look pretty good right now, that the possibility exists for that to change.
Okay.
We have we as individuals, as human beings, we tend to believe whatever's happening will happen forever.
Mhm.
So in 2008, the market was going to 1,000, and now the market's going to 35,000. Right.
Yeah.
So
what's the law of motion? It's something that tends to stay in
bodies that are in motion
That's right.
tend to stay in
Exactly.
motion.
Yeah.
And unfortunately, when it comes to investments, you run out of buyers at certain prices.
Yeah.
And so that motion ends because there's not more people piling in to buy and bid up the price.
Okay.
I mean, that's how all of this works.
Yep.
As long as there's more people willing to pay more, prices go up.
Yep.
And when we run out of those folks, prices come down. So when things are strong, like they are now, this is a great time to refinance your house. We've got some wonderful
interest rates, yeah.
wonderful interest rates. I think people are making a huge mistake taking shorter term mortgages right now.
Because you lock in longer.
You're
term,
locking
low
in,
interest.
I can lock in low interest rates for 30 years.
Okay.
There's even some 40-year mortgages out there that I've
Yeah.
been getting clients into.
So
Really
you don't-
interesting.
You don't think that interest rates are going to come down further in the next year or
How
two?
much farther can they come down?
Negative interest rates like they have in Japan or?
Well,
it's funny
Japan,
'cause
Denmark has them. You
Yeah.
know, you can borrow 800,000 to buy a house in Denmark and pay back 750.
I like that.
It's funny. Every year in December, we gather up all the predictions for the coming year, and for every year for I think the last 6 years in a row, they predicted higher mortgage rates in the following year. In fact, last year they were saying, mortgage rates at the end of 2019 will be 5%,
Yeah.
maybe 6%, and they're 3 3/4. So there's really no guarantee. That's the hard part of predicting is are we going to go into a recession next year? What does that even mean when we're in a recession? Because if the stock market keeps going up and, but growth itself, GDP growth goes down, I'm not sure and again, I admit I'm not an economist. I'm a little bit of a layperson at this overall, but I'm not so sure that I believe that the GDP is necessarily an accurate representation of whether or not the economy is truly growing or not. Because I've read some articles about whether, that it doesn't really show increases in efficiency and technology and the price of technology and the power of technology increasing, but the price per, you know, qubit or whatever you want to call technology going down. All the new startups that we have. What's the value of the intellectual property that's being created daily, especially here in the Bay Area?
And will that value maintain?
Yeah, well, well, I think, it's an esoteric argument, but it's just interesting to note that we could have a recession, but real estate prices could continue to rise. We could have a real estate recession, but GDP could continue to go up, and we could be in what's still considered a non-recessionary growth period. There's just a lot of interesting facets to the economy, both in terms of interest rates, in terms of stock prices, in terms of real estate prices, in terms of unemployment rates. It's very interesting. There's just a lot of head scratching going on right now, especially among those who are supposed to be able to tell us what's going to happen in the next 12 to 24
And
months.
that's why you should be suspicious.
Yeah.
Okay.
Yeah.
Because there's a lot of head scratching. Usually the wind's blowing in a single direction.
Yes.
Right now we have crosswinds. They're blowing in all kinds of different directions.
Yeah.
And usually that's the precursor. This is, you get exhausted. Markets start to run out of new buyers. It doesn't matter if it's eggs or
No, but don't they just
avocados.
like the mutual fund managers, they'll just buy more of the same stocks, won't they?
Well, they
If they
have
have-
to.
if
They
they have the
have
cash.
to.
Yeah.
Remember that. They have to buy. They can't move to cash. Okay?
Yeah.
And when you're invested in a mutual fund, that manager has, when you read the objective of the fund, they have to stick to that.
So if there's a run on the bank with the mutual funds, then they have to start selling things, and that could be a tidal wave.
Well, especially in the bond market,
Yeah.
because the bond market is illiquid if you're not talking about treasuries.
Yeah.
Corporate bonds, muni bonds, they don't trade very often. So when your mutual fund tells you what the share price is, it's a guess. Okay.
Yeah,
And because there's been no transaction to actually set the price.
Yeah.
And but the mutual fund has to maintain a market. If I call them up and I say I want to cash out, they got to give me money after the market closes.
Yep.
So if you're selling into an illiquid market and there is a run on the bank, as you mentioned, you're going to see corporate bonds drop like a stone.
Yeah, exactly.
Okay. And this is one of the things I'm helping people with right now. People want to avoid risk.
Yeah.
And I hear this from a lot of folks. Gee, I'm getting ready to retire. I'm a retirement specialist.
Yeah.
And you cannot afford to lose money
Yeah.
in the 5 years before and the 5 years after you retire. Period. It's just that simple. There's plenty of studies. I'm happy to share that with listeners.
Yeah. Before we go to a break, give out your information.
Sure. You can go to my website, www.gainerfinancial.com.
And that's GAINER.
FINANCIAL.com. Or you can call our office at 415-331-9030.
Okay.
And we have some things that can help you to understand the existing situations and how we're doing on time. We can talk about a couple of the things and maybe in another segment.
Absolutely.
That we're having clients do right now.
Okay.
To accomplish what they're really trying to accomplish.
Definitely want to do that. And
Don't
then
touch that dial.
Don't touch that dial. Okay. Here's our second trivia question. Who succeeded Stalin as Communist Party leader? Which one of those rascals did it? Okay. Call 888-912-1190. Be the first caller with correct answer. You're going to win that tanning certificate. Make a mention here for Hornblower. So eat, drink, and be merry on board a yacht this holiday season with Hornblower Cruises and Events. Enjoy incredible views of the twinkling city lights, the Golden Gate Bridge, and more as you cruise the bay. Gather with family or friends and take a holiday dining cruise. Visit hornblower.com for reservations today. All right, stay with us. You are listening to the Best of Investing. Don't touch that dial. We're going to be right back. Okay.
Is the gain way up? I'm hearing sibilance that I usually don't hear when I...
It's fine here. What's important is this, not this.
Okay.
Sometimes the headphones are a little wonky.
Yeah, sometimes they're
Okay.
old.
Yeah.
I just don't remember, hearing that kind of sibilance before.
Yeah. Whatever. What, sibilance?
Sibilance is
Oh.
that sizzle.
That's me going.
Some people, you know, you listen to them on the radio, and they're every time they say an S, it's like, oh.
Oh, I know.
Okay.
You remember Larry? Larry did that. Remember?
Yeah.
That was so funny. Larry, what's going on? You're making too much breathing noise. Or the guy who keeps pounding his hand. That's
That's right.
All right. And you know, the fund was up to what, 7.85% on the last distribution for the month.
No, it's
That's what.
that's the it's not that blah 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 blah. You caught me not thinking about that. So the year to date, if you take
No, not year to date though. Okay, go ahead. I'm sorry. I'm talking about just a month. Annualized was 7.85.
I don't think so. I think the 7.85. If you have, I don't know if you have my newsletter printed out. So what I show, I don't on the newsletter. I don't do the annualized rate of the current month because that seems like a ridiculous thing to brag about because it fluctuates. What I do is I take however many months of the year of the current year and I divide it by that and I say it's right we're year to date our annualized rate of return is 7.85.
I mean, sometimes it might be 7.2. It could be 7.9, whatever. But last month specifically, if you annualize
and
that
I could be
out.
doing a trailing 12, but again, I just I don't want to get too carried away in my monthly newsletter, and I think the trailing 12 is
which is fine.
The trailing 12 is right
under
about
promise and over deliver, baby. That's how you live.
Always
Happy clients.
It's in the high sevens, the trailing 12, and then the trailing 12 compounded rate is close to 8.
Yeah.
So
where do we want to go next?
We're going to talk about some solutions for people who are getting nervous about maybe, even though the pundits are mixed and divided about whether we're going to be in a recession.
Okay, and then we'll move on after. Okay, so then we'll continue on with Roger.
Yeah.
Okay. All right. Ready? And 1, 2, 3, go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Mark Humph and Roger Gaynor. Our second trivia question was, who succeeded Stalin as Communist Party leader?
Khrushchev?
Yeah, very good. Nikita Khrushchev. Quick,
pound that table with your shoe.
That's right. That's right. That's what he did, right?
Yeah, that's what he did.
The worst part was that it was a very smelly foot. Quick mention here also for the Mount View Hotel and Spa in Calistoga is celebrating 100 years of Mount View memories. Check them out. I don't know if you've ever been there, but they have one of the nicest pools you'll ever see at www.mountviewhotel.com. So, Roger, you're still giving us some advice, like if we're headed into a recession, what are we going to do?
Okay, well, what we were saying at the end of the last segment is a lot of folks lightened up on stocks that I'm talking to over the last year, say, and moved more to bonds. So as I was talking about this liquidity possibility in the bond market of dropping rates because we have record amounts of bonds, corporate bonds on the market, and a lot of that's going to be refinanced in the next few years, and record deficits. So there's going to be a lot of competition for borrowing. And it could, I don't know that it will, but it could drive up interest rates over time, in which case your bond mutual funds are going to lose money.
Yeah.
All right. And if there's corporates, any total bond market index or comprehensive total return funds, if you look at what's in there, you're going to find that credit quality has been coming down in these funds. So if it doesn't say investment grade or U.S. Treasury, you should really take a look at what's in your mutual funds. We can get reports to our listeners, x-rays of their mutual funds. We do that service for our clients. But if you're trying to reduce that volatility by moving into bonds, there are alternatives that will help with that.
Like?
Well, for example, we're investing in annuities is a great bond alternative because annuities will benefit from increasing interest rates.
Well, special types of ones. I mean, not like a fixed annuity.
No, they are fixed annuities.
They're fixed?
Absolutely. Okay. Fixed annuities guarantee your principal.
Okay.
That's what that bond investor wants.
Yeah.
They want a guarantee of principal.
But you're locking in a fixed annuity, though, you're locking in the interest rate, too.
Not always.
Okay.
Okay. And,
So
and
it's
there's a
semi-fixed.
we don't have enough time
Yeah,
in this
yeah.
format to talk about the different types of fixed annuities,
Okay.
but we have fixed annuities that frankly are going to yield 5 to 7% right now.
Okay.
And we've actually seen some higher yields in the last few years. But
I thought that was the difference between a fixed and a
Wow.
variable annuity.
it depends on how you calculate the interest. So there's
Huh,
something called a
okay.
fixed indexed annuity.
Yeah.
That we're receiving much higher interest rates than the 2 to 3% you can get at the
Gotcha.
bank, or now we can lock in 3%
Yeah.
over 5 years.
Okay.
We've even seen that over 3 years about 4 months ago.
But there's ones where you participate in the stock market, but you limit your risk.
Well,
right?
yeah,
So
we
it's a
guarantee
company-
the principal,
Yeah.
but your interest earnings are based on the movement of a market
Gotcha.
index.
Sounds like don't try this at home. You better call the
Yeah,
experts.
yeah,
before
oh,
you
yeah.
start
Well-
dabbling in those types of investments. I think.
Yeah, and the indexes we're using are multi-asset indexes because no matter how bad a recession is, something is always going up.
That's true.
Okay, so when the stock market dropped in 2008, there were still stocks that went up.
Yeah.
We had an 800-point down day about 3 months ago. Remember that on
Yeah.
Monday?
Yeah.
And it was down over 1,000 points and
Yeah,
ended
I
down
remember that.
800. There were still 25 stocks that were up that day. Yeah,
Out
out
of
of the S&P,
4,000.
out of the
Oh, out of
S&P
the
500.
S&P, okay.
Out of the S&P 500.
Okay.
There were
okay.
475 that went
Yeah,
down, and
25
the 25 that went up, they went way up.
Well,
Okay, they were in
Utility-
Procter and Gamble was one of those
Oh,
places.
yeah,
Okay, because
Because people are on the safety.
people think it's safe,
Yeah.
you know, and so they bid up that price of a conservative asset and made it riskier. So
Yeah. That's a good
you
way of
know,
putting it.
and there's markets around the world. You know, we're seeing some really good values in other parts of the world in their stock markets. You know, our stock market has really been the leading stock
Sure.
market for a number of years now.
Yeah.
So there's a rotation. So I'm using multi-asset algorithm-based indexes
Okay.
that are constantly monitoring the market and making adjustments to the portfolio mix.
Yeah.
We're doing a lot of hedged stuff
Huh.
that, you know, we can still, if the market goes great, we're going to participate. But if things get a little choppy,
You're limiting your downside.
and those algorithms also, when the market starts to drop, they'll switch to cash pretty quickly. And we monitor this. Some of these indexes monitor daily. Some of them monitor monthly.
All right, give your information one more time, and then we're going to shift over to Mark.
Sure. 415-331-9030 or go to www.gainerfinancial.com. That's GAINERFINANCIAL.com.
You got to memorize that.
Well, Roger, we certainly agree with you that investors should be looking at alternatives. I'm with you in you know, I have a little bit of trepidation with the, you know, where the stock market is, and so if your investments largely mimic the indexes, there's more than a few people out there that are waiting for that shoe to drop and for there to be a you know, what could be a fairly major, you know, correction in the market, and so we're at a good point right now to be taking some profits off the table and maybe do some rediversification and reallocation of your portfolio. You know, we're at Pacific Private Money. We're in the alternative investment strategy business. Those that invest their money with us, and we use that money to make real estate secured loans in California. We've been providing them with rates in our mortgage pool fund in the high sevens, which is actually for a California mortgage pool fund that doesn't use debt to artificially inflate its revenues.
Yeah.
That's a pure distributed yield of about 7 3/4 right now on our trailing 12, and close to 8% for our trailing 12-month compounded yields. Again, all secured by California real estate. Mortgage pool funds, trust deed investments is another one that we can talk about a little bit, but we're running out of time for this particular segment. But alternative investment strategies, real estate secured debt, things you should be considering if you're
We'll
gonna
talk about that
reposition yourself.
in the next segment.
Yes.
All right. Last trivia question here is: which cuisine gave us kimchi and bulgogi? Which I've had bulgogi and it's phenomenal. Call 888-912-1190. Be the first caller with the correct answer. You're going to win that tanning certificate. Which cuisine gave us kimchi and bulgogi? All right, stay with us. The Best of Investing. We'll be right back.
No, I know.
Korean?
What?
Is it Korean?
Yeah,
Yes.
absolutely.
Yeah.
Go down to Koreatown. You'll get more kimchi than you know what to do with.
Yeah.
And,
I like
and
a
you'll
little kimchi.
sweat. Oh, I love it. Kimchi's really good for you, actually.
sauerkraut,
And-
kimchi.
Yeah,
any
all
kind of-
those good happy bugs in your
Yeah, the
stomach.
happy bugs.
Did you like sauerkraut as a kid?
No, I hated it. I love the raw sauerkraut you can buy at the health food stores. It's not meant to be eaten like with a hot dog or as a side
Yeah.
dish. It's just
No,
you
just
take a couple of scoops and just to get those.
Yeah, even made some
those
before.
bugs.
My dad was German, and he liked to cook German.
Yeah.
So
So,
we had
uh,
sauerkraut.
So sauerkraut, sauerbraten.
So brought
You probably had the purple, the red cabbage
Cabbage,
that
yeah.
as kids you hate, but as
Oh,
grown-ups you love.
that stuff with the caraway seeds in
yeah,
it.
red cabbage.
Okay, that was segment number
Bratwurst.
3. In fact, I was going to mention
And
that.
schnitzel. Don't forget
Oh,
schnitzel.
all the
Yeah, schnitzel, yeah.
Putz schnitzel and all kinds of
Not
schnitzel.
der Wiener Schnitzel. That's just not schnitzel.
No, that's
man.
No,
not schnitzel.
Schnitzel's not a hot dog. It's a veal or pork cutlet with some kind of
Oh.
sauce on it.
Yep.
Yeah.
Gotcha.
And it's
Kind
all
of
the
gross.
sauce.
It's
Yeah.
kind of gross.
I was gonna say that getting some of these newsletters, the unleveraged one from that one was in the mid 6s or lower,
Yeah.
and the leveraged one was not even 7%.
Yeah.
You have to be. I have a report sitting on my desk about the leveraged loan market. That may be the deal that pushes all the other deals. Well, it might be the trigger. It's not going to be regular mortgages now.
Yeah.
It's going to be leveraged loans or corporate debt or municipal debt.
Yeah.
And those are going to be one of those three is where the cascade will begin. And it'll start slow and it's like a snowball rolling down the hill.
All right.
Very scary. Okay, you guys ready? Here we go. 1, 2, 3, go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Roger Gaynor and Mark Hoff. Hey, I switched it up a little bit. Can't tell players without a scorecard. Third trivia question: which cuisine gave us kimchi and bulgogi?
Korea.
Korea. That's right, Korea.
Yes, indeed.
Oh, bulgogi. That's just
I
so
know.
good.
We were talking about Korean and German foods off the air here. Sauerkraut,
Sauerbraten.
sauerbraten, and red
Schnitzel.
cabbage.
Fermented foods.
Yeah,
Fermented foods with
exactly.
those good bugs for your stomach. Yeah.
That's right.
Yeah.
Okay, so Mark, off the air, we were mentioning about how I had seen a couple of newsletters with companies that were kind of similar to yours, a little bit different, but somewhat similar, and the rates that they're paying their investors on their fund is in the 6s, and the ones that are leveraged are still under 7%. I mean, what makes you so much better?
California-based mortgage pool funds, real estate loan-based mortgage pool funds, generally in California are paying anywhere from the high 5s, low 6s to as high as around the high 7s, low 8s, and the leveraged funds will tend to be produce a higher yield, but not necessarily, because again, some of these, what's happening in California, there's a lot of competition among lenders, and so it's driving yields down for a lot of companies that are deciding to compete on rate. So if you're a company out there competing on rate and you're no longer charging 9%, but now you're charging something in the 8s or even the 7s, which is as a borrower you can get hard money loans in the 7% range, which is historically unheard of for California. But it's because of all the money and all the new companies that have sprung up here. And so those companies that don't have the same type of deal flow that we have, and they're choosing to compete on rate in order to help their sales team, get the loans and get them, across the closing table. Those rates are going down, and the downward pressure is still there even today. There continues to be downward pressure on rates and fees in the hard money lending business, particularly for fix and flip loans. So because of that, most California mortgage pool fund yields are trending downwards. So it's not unusual to see prospectuses and historical distributions in the 6% range right now on a trailing 12 basis. However, Pacific Private Money, we don't compete on rate. We have some rather unique products, and we've got a really well-trained sales staff that we just, we would rather turn down a loan and say no. And if they've got a better deal down the street, we're not going to match it. That's not the business we're in. We have other things that we're selling when people come to us. And so we're able to maintain higher rate yield, and our mortgage pool fund has a trailing 12 distribution close to 8% right now.
Can I ask you a question?
Yes,
You
absolutely.
mentioned something, and I think a lot of people, I think it's really important. A lot of people really don't understand because you just touched on it briefly. Leveraged loans.
Yes.
Talk about what you mean by that and why that might be a little riskier than an unleveraged portfolio.
Well, leveraged portfolio is one where not only are they using the capital from the investors to make loans, they're also going to a financial institution, a bank, and getting a line of credit for somewhere around 5.5%, 6%. So the cost of funds from a bank is lower than the cost of funds generally from a private investor. And so you can take that bank financing and create a little arbitrage and boost the yield up. And the higher percentage of leverage that you use, the more the arbitrage begins to impact the bottom line distributed yield. And so it's not unusual to see maybe like a 10% leverage amount, which
That's not going to impact.
in
that's
my
not gonna
opinion is
impact.
pretty conservative.
that's very
Yeah,
conservative.
and generally when you're talking maybe 10%, a line of credit or bank leverage equal to 10%, that's usually there to help with liquidity issues, to close and to be able to redeem people.
And the arbitrage is only going to add maybe 5 basis points or
Right.
something.
It's those funds that use 25%, 33%, 50% leverage. I mean, there are funds, generally not mortgage pool funds, because most of the people that we know that are managing, California private originators, most of them are not doing the 4-to-1, leverage ratios that you see in some certain hedge funds and other types of activities.
Yeah.
But you do want to make sure, you do want to find out in any private placement that you're thinking of investing in, any kind of mortgage pool fund. Mortgage pool funds are by definition generally private placements. And so you'll have an offering circular, and an offering circular will discuss how much leverage the manager is able to use. And so you just want to be careful in this market where we are, where we're likely to see downward pressure. Maybe others have described it as being on the crest of real estate prices, and maybe we'll see a 5 to 10% adjustment downward in prices potentially in the next 24, 36 months. And if that's so, you want to be wary of risking of investing in a fund that is using debt to increase its yield. Because essentially, what happens if the bank calls that loan?
Yeah.
I mean, Edward, you've been in this business even longer than I have, and you know what can happen when you've got too much debt risk.
Yep.
Essentially, the bank gets paid first.
Yeah.
First and always.
Those covenants can just kill the company.
Mm-hmm.
Yeah.
And what if they can, cancel and call the
That's exactly what they do.
the line.
And then yeah.
And
And
there
you
are
don't
some
money.
pools that the line of credit can't be called unless you give them a 1 or 2 year advance, but those are very rare.
Yeah. Yeah. Most banks are not going to allow that kind of a leash.
No, it depends.
on that.
You're talking about bigger institutions.
But generally speaking,
Strong
investing
track
in mortgage secured debt is an alternative investment strategy that we're very high on, and we think that anyone that's nervous about their bond and or stock portfolio, or even their real estate portfolio, and are thinking of selling real estate because maybe they believe that now is probably a good time to take that capital gains hit. Looking at real estate debt and real estate debt options is a great feature.
Yeah. And that's another alternative area. There are little pockets in the real estate market that aren't overvalued,
Yes.
that are recession resistant. We look at things like supermarkets. You can't buy your groceries online. I mean, yes, you can from Amazon, and they'll deliver, but where are they going to go to get the food?
Yeah.
Your local Whole Foods, or when Safeway delivers.
Yeah.
Their warehouse is that Safeway on the corner.
Yeah.
Okay.
But the products have to come from somewhere.
And they don't come from central warehouses. We look at mobile home parks are very recession resistant. The people who live there, their incomes aren't dependent on whether the stock market's good.
Yeah.
They're what we call pensioners.
And if you have a recession, sometimes people have to move out of their house and into a mobile home.
Well, that's it. And there's a limited supply of those. So we were actually investing in those these days. Things like student housing. I mean, the universities, there's a new crop coming in every year. So anything that we have a nice feeder of in a downturn.
Absolutely.
Okay. All right, guys, we don't have a trivia question, but when we come back, we're going to have some important closing comments here on the best of investing. So stay tuned. Don't touch that dial. We're going to be right back.
Perfect.
All right, got 4 minutes. What do we want to talk about on the last?
How about leaving on a high note?
Uh,
You know, the idea we're talking about that things might be bad, but you don't care if you're raining, if it's raining, if you got a raincoat and an umbrella.
Right.
So if those that are prepared aren't going to get wet.
Yeah.
And that's, you know, that's all we're suggesting to people. And at some point, I'd like to talk to you a little bit more about how the pool is structured and
Sure.
works, because I have licensing restrictions. So I have to be very careful
yeah. I mean,
about how
do
I,
you-
you know,
Are you
I
with the
try to
broker?
lead into you,
Yeah.
you know,
Yeah.
Are you
and
with
I
the
have
broker?
done that in virtually every episode I've been on.
Wait, are you licensed with a broker dealer?
No, I am.
Okay.
I'm not FINRA
Okay.
licensed, but
Okay,
I
that's
am
perfect.
SEC regulated. I'm with an RIA.
Okay, so what we've had RIAs, because you don't have to worry about the selling away type issue. What they've done is, like, we have one guy who has referred a lot of business, and the way he does it is he kind of does a hands-off where he just says, check these guys out, you know, I think they're good, you know, and all that kind of stuff. Do you charge assets under management?
I do. That's some of what I do.
Okay, because
But a lot of alternatives don't pay that way.
well, that's the thing.
So I
is-
charge due diligence fees and stuff like that.
Yeah, I mean, like, we don't, Pacific Private Money doesn't pay a commission. So what some financial advisors can do is just have it under the umbrella, because we do have a CUSIP number with Fidelity.
You do have, so you can be held on the Fidelity plan because that's my platform.
Oh. So then
That's
we're-
where we,
Yeah.
that's
and
where
so
we,
from your perspective, you don't really have to babysit it too much because the price don't go up and down. It's
no,
just-
no,
it's
late
it's great.
stage debt is, you know,
Yeah, and
we've
we
got some
have-
commercial mortgages stuff that I don't bring it up because it competes with your stuff.
No,
Okay, so I don't bring
That's
up
fine.
the commercial mortgages that we're using. We've
Yeah.
got some commercial mortgage REITs
Mhm.
that, because of the tax advantages to REITs, are really attractive.
well, actually, we do qualify for Qubit.
Oh, you do?
we
The first
do.
20%
The 20%.
and 21% on the rest?
Well, we have the
Pass
20.
through.
It's
You get the 20.
The 20% if your income's under 315.
Got it.
So
Okay.
I mean, the REITs have the unlimited one. But,
Right.
So we do have. Yeah, I mean, if you have people who are multi.
Well, that's why I want to sit down, you know, not here, but just find out more about the structure and how it
exactly,
is.
and the liquidity. Because if you ever want to get out, it's liquid.
Well, and
That's
that's
important.
very attractive.
Very much so. Okay, well, so we'll say we're going to end on a high note here.
Okay.
Okay, ready? There we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Humph of Pacific Private Money and Roger Gaynor of Gaynor Financial. Now, we were talking about recessions and stuff like that, but Roger, made a good suggestion. You said, let's end on a high note.
Well, yeah.
Oh,
You know, if you turn on the news and they say it's going to rain tomorrow, and you leave in shorts and a t-shirt, you're going to get wet.
Yep.
Okay, but if you
And
got
cold.
right, and if you got an umbrella and a raincoat, you're going to be just fine.
Yep.
So what we're really talking about is to get that raincoat out of your closet. It doesn't mean you can't enjoy a nice day. So just take advantage of where we are. There's plenty of opportunities to make money, but let somebody else do the losing.
Okay. I like that.
There's, Edward, you and I had went to like our first of many, Christmas luncheons, and this was the
Oh, yeah.
Marin Association of Realtors, and they had the California Association of Realtors economist as a keynote speaker. And, he was full of his charts and graphs, and the net was, he was not calling for a recession in 2020. I'm curious to see as the month goes on and we get into that news cycle in the coming weeks where the predictors are going to be coming out and they're going to be, discussing, what's going to happen or what they believe will happen in 2020. He did say, though, interestingly enough, that, and I appreciated this information, that from a California perspective, he expected the next real estate cycle to be a soft landing cycle.
For here, not everywhere.
Well, it when you say here,
California.
California is
for
what I'm
California,
talking about.
yeah, right.
There are pockets that are already seeing pretty significant drops in valuations. I've had some
the
clients
high
in
end,
other parts of the country taking losses.
Well, I met with a real estate agent today who was telling me how prices were dropping in the high end in Tiburon. And I said, well, I don't know if they're dropping. They're just, the buyers, the home sellers are just not getting it anywhere near what they want. They list the house for too high, and they're just not getting that premium on a cost per square foot basis anymore, unless they've got the dead-on view of San Francisco skyline. And there's plenty of homes in Tiburon that don't have that yet, but think that they're entitled to get $1,500 a square foot, and they're not. It's just not a market that's on fire anymore. It's really cooled down. I wouldn't call it a buyer's market yet by any stretch of the imagination, but prices are stabilizing. And according to the Case-Shiller Home Price Index in the Bay Area, which measures price per square foot of actual home sales, we've had 2 months in a row now of year-over-year depreciation of home values in the San Francisco Bay Area. So that's going to continue. But again, it's not a 5% drop. It's just 1% year over year for the last couple of months. So again, I think that these are all, as you started, Roger, at the beginning, the crosswinds, we're seeing them. So prudence is in order, and but none of us really have that crystal ball we all wish we had.
This is where advisors earn their keep.
Yeah.
By
Absolutely.
helping you understand how to protect yourself. You can extrapolate from here. If we have a turn down and you look at the deficits we have, it's a pretty good chance, no matter who's in charge, there might be a tax increase in the not too distant future.
Gotcha. Well, I know one of the things at Pacific Private Money, what you do is the way you guys can pull back is you can make your underwriting even more conservative,
Right.
and go from 70% LTV to 65 or 60%.
Exactly.
Yeah, we're not worried about demand for capital, even in a recession. The demand just shifts. It's
That's
the
exactly
opportunists are going to come out of the woodwork, and they're going to be looking for capital, and we're going to be there to provide it for them.
And you do short-term loans, so there's generally not a crash overnight in real estate. It's usually a prolonged decline.
Yep.
It's kind of rare that it's like the stock market drops 800 points one day. Usually you don't have from one day to the next.
A 5% drop in real estate.
Yeah,
prices?
usually not. I mean, unless there's a sinkhole or something. Okay, gentlemen, always a pleasure. Excellent show today. Really appreciate the information, Roger. And we're going to cut off to our thoughts for the day. The importance of walking. I joined a health club last year, spent about $400, haven't lost a pound. Apparently you have to go there. Didn't realize that. I thought you just spend the money and then you lose the weight. And the other part is every time I hear the dirty word exercise, I wash my mouth out with chocolate. I figure that, there you go. That'll work, right? Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Right on the money, baby. I got to let this thing go for another 8 minutes and
that
4
that
seconds.
little introduction thing that you talked about, where you can just send clients over. I did that with a guy who was doing bridge loans in 2006. Oof. And it did stop on a dime. I even called him up in middle of 2000 when things started happening.
Yeah.
And he goes, "Oh, well, we're in commercial investment property. We're not in residential."
Well, when you say it stopped on a dime, meaning
They were doing bridge loans to syndicators,
yeah,
who were buying up and selling off. They were 6-month loans. What
yeah,
could
but
go
in
wrong?
those yeah. Well, no, I mean I've been there, done that. So
These guys were great because they stuck it out.
Yeah.
And they did workouts over 8 years.
Which company?
And I'm trying to remember
I mean
what
here
they called
in
it.
Marin?
It was in the city.
Oh, gotcha.
It was actually the guy who introduced me to his father-in-law who was doing this. Was a guy when I was in the brokerage business. He was my buddy, bro.
Gotcha.
The guy you set in the next next cube.
I mean,
Covered your book when you were out of town.
The way I look at it is everybody needs a place to live. Mostly what we're doing is...
Well, I agree that this is lower risk than that.
Is it risk-free?
But that's
No.
why I need to understand before I can
Well, like here,
talk about how to use it.
I'm about to do a loan, $100,000 loan, first mortgage on a property that has an appraised value of $900,000, and it's going to pay 8.5%. Is it risk-free? Absolutely not. It's a 1-year loan. Could I lose money? Absolutely. But what are the chances I'm going to lose
Right.
on a property like in 11 months that it goes down over 90%?
We've got a
Probably
great
not.
investment in mobile home parks in Florida,
Uh-huh.
and the insurance, and it's not in the floodplain.
Okay.
It has a little of that during the hurricanes a couple of years back.
Yeah.
Total damage in the portfolio was $51,000.
Oh, that's not bad.
And, because really, what do you own?
Yeah.
You own some
Land.
concrete,
Yeah.
some wires, a few pipes, a
And this-
septic system. The thing that just gets destroyed are the mobile homes, and
Yeah.
you don't own those.
Yeah. So long
And
as
they
those
have
people can-
insurance that continues whatever the income is for
Mhm.
12 months.
Mhm.
Well, because they're manufactured homes, they're sitting on a like a used car lot. I mean,
Yeah.
you go to the car dealership, well, you go to the mobile home dealership, they got inventory. You can replace. It's not like Paradise where you got to
Yeah.
get a builder up here and wait for permits and all of that stuff. You're buying a home, they're trucking it in, they're dropping it down, and they start paying again.
Yeah.
So I've looked at it. It's the kind of thing, $400 a month, $350 a month
Yeah.
in
Where
rent,
can
and
you
then
live for
and then you increase it
Yeah.
by $25. They're not going to pick up their mobile home and move it.
not for $25.
Right,
Yeah,
but
you-
$25 is like an
percent.
8% jump in your
Yeah.
yield.
Yeah.
Multiplied times 1,400 spaces.
Yeah. No, you just have to have good
Yeah.
management because that stuff always.
Well, that's the whole. Is the play is we bought mom and pop shops,
Okay.
and brought in professional management,
that's smart.
and that's
That's what you got to do.
But I agree, cash, or these kind of conservative nooks and crannies.
Yeah.
Can't see the freeway from here. I got to try to get back up to Novato for my gym appointment.
Oh, you have to go back?
Yeah.
Oh, I didn't know that.
All right. Well, it's been great, gentlemen.
All right. Let's see. Not too much going on tomorrow, I think.
No, I've got the guy come over to my house and we work from home.
Okay.
Today, I don't know when I get to Novato.
On a fly day.
Pleasure. Where's your office again? Are you in this building?
No, I'm 2 blocks down. I'm at 4th and C. Where the Chase Bank is in the lobby.
Yeah.
It's called the Diversified Financial Building.
That's Jack's old building.
Jacksonville Building.
Diversified Financial.
That's what it says it on a plaque.
Jack
Jack's
still
still out
answers
there.
his phone diversified too. So funny.
Jack is a kick and a half, and he still shows up 4 days a week.
Yeah,
Yeah.
I saw
When
this
he's in
morning.
town.
He came in
Yeah.
to pick up his $1 million check for
he
pay down
closed?
on his $3 million loan. Yeah, well, the first one closed, and hopefully the second one will be in escrow shortly. And
Jack seems to be getting liquid.
yeah,
Yeah. Oh yeah, he sold that thing for 14.
14, and he goes, "How did you know?" I said, "It's on the front page." Yeah, well, I'd heard at CIMNB. A guy walked up to me,
Oh.
knew what building he knew that I knew
Yeah.
Jack, and he
Well, it's all
walked up
public
and
information.
and he
you
goes,
know.
they're selling the building. And then Jack walked through with the lender, which is a life insurance company,
Yeah. Yeah.
Minnesota Life,
Yeah.
owns the mortgage on that thing. And he said, "Oh yeah, this guy's from Minnesota." "Oh yeah, I do business with Minnesota Life."
Yeah,
Sure.
sure. Yeah.
I said, "When are we going to get the estoppel?" He looked at me and said, "What are you talking about?"
Yeah.
I said, "You're selling the building, right, Jack?"
Yeah.
He goes, "How the hell did you know?"
Yeah,
I said,
yeah, yeah.
"This is Marin."
Yeah, exactly. And he knew what an estoppel
Good to
was.
see you, Roger.
Yeah.
Take care.
All right, sir.
All right, Edward.
We'll talk to you soon.
Yeah.
All right, enjoy, boys. Stay dry if you can.
Yeah.
All right.
Yeah. Jack's a kick.
Yeah.
I have so much respect for that guy. Do you know his story?
I don't know the story. I just know that he lit the thing on fire in front of the.
Oh,
that's
I love
great.
that.
I love that.
And
love
I knew that story before I
Yeah.
met Jack.
Like how he acquired his wealth. Where does he come from?
So Jack grew up in Poland.
Poland.
He's a Polish Jew.
Okay.
He ran from the Fuhrer. His
Ah,
family
okay.
left. They weren't allowed to come here, so they ended up in Argentina
Ah, okay.
at
Seems
the
like
beginning of the
Argentina.
war.
A lot of people in.
Yeah,
Argentina.
on both sides of the war.
I was gonna say,
The
boys
from
Adolf
Brazil,
Eichmann,
yeah,
right? Adolf Eichmann. Yeah.
Yeah. So one day, now this is the way Jack tells the story.
Yeah.
One day Jack was looking through like National Geographic.
Okay.
And he saw pictures of the Bay Area. And he said, this is unbelievable. That's where I'm going to live.
Huh.
So he said, when I graduated high school, I had a few $100. I got on an airplane and I flew here. He was 18 years old. He was
Not
on
knowing
his own.
Not
left
knowing
his
anybody.
family.
Yeah.
Didn't know anybody.
Wow.
And he built it all from there. You know, he owns a ton of property up in Spokane.
Yeah, that I knew because he told me about that.
And out in Vallejo, he's got all these housing developments that he did out in Vallejo.
Oh, okay.
Yeah,
I think I knew about the
he had
whale.
several housing developments out that way. I think he sold out of them a while ago. And of course, he still got that property over in Mill Valley
Oh yeah, that's
where
yeah,
that he
that
burned
one.
the model on.
Yep. Yeah, my wife's family, gosh, they settled in Vallejo back in the 30s or 40s. So that was, when Jack,
Yeah.
that was way before Jack. Yeah, no, in fact, they're going for a reverse mortgage now
Good for them.
on it. Yeah, that's for them. It's not always smart.
Now
But in their case, it's smart.
Well, for more and more of my clients now, are they going for a HECM or are they going for a private?
I mean, it's a HECM. They're going to impound 8 years worth of insurance and taxes because of the ability to repay those. It's challenging, as they say. We're going to cut out here right now. Goodbye.
Because they might